Hello, everyone. Welcome to our new video on this interesting topic of real estate and gold investments. Are they good options as Sensex is at a new high? So what will we cover in this video? Sensex is at a new high, so many people are turning cautious. What do these same people think about gold and real estate? And what should investors do? 3 strategies for investing at all-time highs to help you improve your returns. And an open challenge. Very interesting chance for you guys to win something really big. The trigger for this video, starting off with the trigger, last week of June, the RBI issued the sovereign gold bonds at a price of 5926, or with a discount, online discount at 5876 per gram. Well, our clients invested more than 1 crore of rupees in this. That is more than 1.6 kgs of worth of gold was purchased without any follow-ups. Interesting. Next, one of our clients is looking to sell his property, but wants to reinvest in real estate. So he wants to pick up a plot of 30-40 approximately with little more than 2 crores of investment to get rent. Another client wants to buy a plot of between 2,000 to 2,500 square feet, construct 3 floors, including a builder floor with 4 to 6 houses, total cost 3.5 to 3.75 crores, and earn 1.1 to 1.2 lakhs. That's his estimate of monthly rent after 2 years, because that'll be the time for him to complete the construction and things. This is for his retirement. So this got me thinking as to what people are doing and how they're managing their investments. So coming to all-time highs of Sensex means we're just little over 0.5% off the highs. Today, the markets are just closed at about 65,400. Gold current price is about 60,500. All-time high is about 62,000 change, so roughly 3% off highs. Plots, Sarkar Nagar I'm bringing because of this client who mentioned Sarkar Nagar, but most other areas, plots are priced at all-time highs currently. So meaning all asset classes, we are at all-time highs. Let's also talk about past returns. Of course, they need not repeat in the future. And when we speak about mutual funds, we have to also speak about mutual funds are subject to market risk. This single line has destroyed a lot of people's confidence in this lovely product. So let's speak about this. Well, what have equity funds done over the last 25 years? On an average, funds have delivered anywhere between 25 and 50 times. So investment of 1 lakh of rupees has been anywhere between 25 and 50 lakhs over this period of time, 25 years. With, of course, many funds who've given more than 70 times, 80 times, up to 100 times as well. Come to gold. Gold is given about 15, 16 times in 25 years. That means 1 lakh of rupees has become 15, 16 lakhs. Not bad considering gold is a slow-moving investment. Of course, I'm not including gold jewelry because there with making charges, wastage and whatnot, the returns come down. Plots in multiple different locations have on an average given 20 times, going up to 30, 35 times as well in some locations. So 1 lakh of rupees, of course, you don't get a plot for 1 lakh of rupees. Might be 25 years back, yes. 1 lakh rupees plot is now what might be 30, 35 lakhs, 40 lakhs. Some areas have really grown better. So 50 to 75 times as well has been the growth as such. As I said, past returns need not repeat in the future. So this is speaking about all-time highs. So Sensex, gold, real estate, all are at all-time highs. But also, what else is at all-time highs? Tomato prices. I'm sure you've been hearing a lot about them. Grocery costs, petrol prices, school fees, healthcare costs. What was launched as a common man's car, a Toyota Innova from 10 lakhs about 12, 13 years back is now 37 lakhs. So I'm saying everything is up. This is due to inflation. So expenses are at an all-time high. So asset classes also need to be moving up. So that's why just to bring that up, that don't worry about all-time highs. So how come people are not comfortable with equities at an all-time high, but are okay to invest in gold and real estate at an all-time high? Simple answer. We think long-term when we are investing in real estate and gold. I came across people talking about 15, 20 years for real estate, 8, 10 years for gold. Whereas what CNBC and social media have been telling us that equity is for quick returns for short-term investments, which is actually totally wrong. Now let's do a quick comparison of all these 3 asset classes. Speaking about equity funds, potential of high returns, very liquid, Minimum investment is very low. Market risk, yes, very volatile. Partial exit, yes, you can invest a lakh, withdraw 10,000, whatever you want. Taxability, very tax efficient. Transferring to your dependents, very, very simple and straightforward. Speaking about real estate, returns are moderate to high. When I say moderate to high, because apartments are not really going to give any meaningful returns. Of course, the builders will tell you otherwise and sell it to you. But ask anybody who's having an apartment which is 15, 20 years old and will tell you hardly any returns coming out from that asset class. Plots have given better returns and likely to do so in the future as well. Liquidity, real estate is not very liquid. People are struggling to sell their old properties. Minimum investment, again, generally unaffordable. You need to take a loan, or most people at least need to take a loan to buy any meaningful real estate investment. Market risk, yes, real estate is also subject to market risk, but prices are not disclosed as transparently, so it's not as much as equities. Partial exit is not possible. Taxation is not very, you can say, tax efficient, and transfer to next gen is complicated, means you need to have a will. Gold is moderate returns, liquid, low investment. Now, in terms of taxability, also moderate, and transfer to next gen is also very, very simple and straightforward. So just to think, so lots of greens on the equity funds, but what this slide will show you is why I've actually done this presentation. Breakup of household assets. More than 50% of household assets are currently locked in real estate and properties, 51%, followed by about 15.5% in gold. So 66% of household assets are in these two asset classes, followed by bank deposits, insurance funds, provident funds, and a very, very tiny 5% or less than 5% in equities, which is proven to be the highest return generating asset class. So very strange, right? And people speak about wanting high returns from their portfolio. So 3 strategies that will improve your portfolio returns. Firstly, stop tracking index levels, because as economy grows and due to effect of inflation, as I already showed you, you will see higher levels on the index. 1 lakh is coming, so buckle up, possibly in the next 3 to 4 years. Gradually increase your equity exposure over the next 12 to 24 months. Don't try to be very aggressive currently. Think long-term, think equity funds, as we've already been saying to you. Don't put any short-term money into equities unless you're a trader. So at the bottom, I've shown you a small chart, what the short-term can look like, but long-term is very different. So do think long-term and you'll be benefited from it. And well, coming to the challenge before we end up this video, it's an open challenge. Please show me a more simpler, tax-efficient, transparent, easy-to-invest product than equity mutual funds, which can give similar or better returns over the long term. And we can decide whatever wager you want to put, we will be good with that. Because on behalf of our clients, we are always looking for products which will give better returns. Hope you like this short video from us. Do give us a like to encourage us, and also share this video with other people who are worried about what to do at the Sensex at an all-time high. Thank you.